Yo everyone, hope you guys have a nice weekend. Welcome to the Savvy Mind. It's been a wild ride this week, and today I would like to do a breakdown of the outcome of the latest Fed FOMC meeting. So here is the video and let's go! Here is the Fed meeting breakdown. Jerome Powell expected GDP to be 2.8% by end of 2022. They will also be doing 7 times of 25 basis point hike in this year 2022. Inflation peak has delayed due to the recent Ukraine war. In any case, if the inflation does not inflect down by Q3 2022, Fed will increase the interest rate to 50 basis points. Powell also highlighted there is no wage price spiral and the possibility of a recession is not particularly elevated. He feels the current economy is very strong and expect quarter 2023 to have a huge CPI drop. Okay, now let's move on to the technical analysis. On SPY daily chart, earlier this year we have a week off distribution phase which marked by smart money taking profits and heading to the sideline due to the uncertainty of the market. In turn, this leaves the market in weak hands that are forced to sell when the range fails in a breakdown and a new markdown phase. This bearish period generates throwbacks to new resistance that can be used to establish timely short sales, which can be shown in this chart here. So after the Fed FOMC meeting, we currently have a week of accumulation phase. The pattern often uses a failure point or spring that marks a selling climax ahead of a strong trend that eventually exits the opposite side of the range. The last decline matches algo-driven stock hunting, often observed near downtrend lows, which price undercuts key support and triggers a sell-off, followed by a recovery wave that lifts price back above the support. As you can see over this chart, there is a triple bottom over at the SPY chart, which symbolizes a spring. And currently what to watch out for SPY S&P 500 index will be the 454 to 460 range. If we manage to break that, we will see ourselves back in a bullish market, as 454 to 460 range is actually the resistance point that we have to actually break. Take note, the current yield curve is sitting at 0.17, and the danger of having a recession is still there. As for now, in the short term, the market will rally on the upside till 454 to 460 range, which I will expect a week-off distribution phase cycle again, which potentially I think it will happen in the month of August or September 2022, or probably earlier, maybe in the April. As Fed will be deciding whether or not to raise interest rate to 0.5 basis point, or technically in April due to the earnings season. So yeah, like I said earlier, the market does not like uncertainty. Since the uncertainty like wage price spiral, supply chain issues, hyperinflation, war and everything else has been priced in due to the recent Fed meeting, clearing all the doubts, this in turn brings on the bull rally. The only bad news that will hit the market will be if the war doesn't end in May, or maybe Russia go crazy and do some nuclear threats. So yep, stay healthy and invest safe.